Welcome to the Competitive Edge. I'm Jamie DeKesser with United Answer Group, and I'm going to just give you a quick couple-minute breakdown of what happened last week, a little recap, and what to look for this week in real estate and mortgage markets, and maybe throw in a couple useful tips to help you be more competitive in this market that we're seeing and things that are changing so rapidly on us. So let's right to it. So a little quick wrap-up of last week. Again, we saw some higher inflation numbers than expected. We all saw the markets kind of take a dip with more than anticipated CPI numbers, which are Consumer Price Index. It increased by 0.1% in August. Although that sounds like a low figure, it was larger than the negative 0.1% that was anticipated. So that caused a reaction in the market. And again, all these changes are what affects our mortgage rates, stock market, all that good stuff. The headliner of last week was the core CPI number, which takes away food and energy prices out of that calculation because they are pretty volatile and they move quite a bit month to month and year over year. But so that rose by 0.6, which is a really big deal because that was double the expected rise of 0.3. And as a result, year over year, the CPI was increased from 5.9 to 6.3. And again, the overall CPI inflation number is 8.5. It declined from 8.5 to 8.3, but still 8.3 is like a 40-year high for inflation. So that is the reason we're continuing to see a really bad environment for the mortgage market right now. The continued high inflation numbers, even though the Fed has been trying to increase their rate to slow down inflation numbers, we're not seeing the results just yet. But big news coming out this week is going to be the Fed meeting, which started today, ends tomorrow, and tomorrow afternoon is when they're going to, kind of have their announcements about what they're going to do coming out of that meeting. We have been anticipating a 0.75 increase again in the Fed rate. We may see a 1.0, like a 100 basis point raise in the Fed rate because of the numbers that we saw last week. So hopefully they take a strong stance. If we can get that 100 basis point increase, that is a really good, indicator to the market that they're serious about slowing this down and, really trying to curb inflation, make things a little more affordable for people. So what we're seeing, and real quick, go to, what everyone knows right now, right, is rates have just been getting crushed lately. So this chart over here is the last 180 days, so 6 months of what we've been seeing in mortgage rates, okay? So we've gone from the mid-4s, spiked up in June, then they started to come back down again, and now we see them spike up again because of these continually just bad inflation numbers. And, no one talking about in a recession or anything like that. So those numbers are not great. We see, sort of the averages here for 30-year conforming, FHA, 30-year conforming is in the low sixes now, 6.25, 6.375, depending on scenario. FHA and USDA, VA are all in the very high fives, depending on the scenario, okay? So I've got some strategies that I think can help everyone with, getting some better rates short term and wait for this to, sort of calm down and move back into better territory. So what we're seeing here is this is what's going on right now at live time in mortgage rates. So MBS, okay? This here, if we look back to mid-June, we saw some big inflation numbers again and a big drop-off and a sell-off of mortgage bonds. But what we then saw was at the June meeting, the Fed was very strong on their stance, and we saw a bounce back, okay? And we were kind of riding that for a while. We got some good, decent numbers again, beginning of August, end of July. But then we've seen the just steady drop. So hopefully we're going to see another bounce back here. And, what we're going to start to see is some better inflation numbers going forward because the year-over-year numbers that are getting replaced. So what's happened the last couple months, the reason we've had really bad numbers and seen increases is that the numbers that are being replaced by this year's numbers were very low numbers because we had, low inflation mid last year. So as we go into the fall last year, we started to see inflation numbers rise. So now as we see those higher numbers going into the fall, so like October number is going to be a higher number that's going to get replaced by this year's number, October number. So hopefully we're going to then see a decrease, and then we're going to show that what the Fed is doing is slowing down inflation. That's going to be really good for the for the market, and people are going to be more comfortable and want to stay in the market more, okay, and buy those bonds, keep our mortgage rates at a reasonable level, and get things continuing to flow again, right? We're seeing housing prices kind of level off. Okay, we're not seeing decreases, right? We're seeing price drops. That doesn't mean housing prices are decreasing though. So when you're considering doing a price drop, give me a call, because I have some strategies that maybe we don't have to drop it so much. We can offer some buy downs, some seller concessions to clients to make sure that the buyers are getting a really good deal there and have an opportunity to get a good rate that they can lock in for the next couple of years until hopefully we get rates back down into the fours again. And they can afford a little bit more that way. And the sellers are still going to net out a little bit more. So I've got some great strategies to help you guys out that way. But just a quick update on what's happening in the market. So really pay attention tomorrow afternoon to what's going on and what the Fed announces, because that's going to be a big deal that could really help us out. Or if they're very sort of dovish and weak on what they're doing, we could go the other way again. So let's hope for some strong announcement tomorrow afternoon and some really good bounce back to get these rates back down under control and get these buyers out there shopping again. I'll talk to y'all soon. Have a great day.